At Insightful Value, we love digging into the companies most people scroll past. And today, we've got one that might surprise you. Kirin Holdings, yes, the Japanese beverage giant, is trading at surprisingly low levels right now. But what's behind the dip? And is there a hidden opportunity here that most investors are missing? Let's break it down. This review is for educational and informational purposes only, not financial advice. Kirin Holdings is one of Asia's most well-known names in beverages, owning a strong portfolio of beer, soft drinks, and health-related products. It's not just about beer anymore. Kirin has been expanding into the health science and pharmaceutical segments, which now contribute meaningfully to revenues. This diversification makes the company more resilient to changing consumer habits and market cycles. In 2024, Kirin reported annual revenue of over 2.3 trillion yen, or roughly $15 billion USD. Operating profit has held steady around 160 billion yen, showing the company can still generate solid returns. While margins in the traditional beer segment remain slim, the company's health science business has better margins and long-term growth potential. One of the major headlines recently is the company's aggressive push into functional foods and wellness, including acquisitions in probiotics and investments in fermentation-based ingredients. Kirin wants to be known not just as a beverage brand, but as a life science innovator. And yet, the market hasn't fully bought into that vision. Kirin's stock has been under pressure in the last year, with concerns around slow growth in the beer business, competition in the Japanese market, and a lack of blockbuster acquisitions. But here's the thing. The valuation is starting to look attractive. The stock trades at a relatively low PIE for a consumer defensive name, and the dividend yield sits above 3%, with a stable payout history. Kirin has increased its dividend modestly in recent years, and the payout ratio remains healthy, under 50%, which leaves room for future hikes or buybacks. So why consider Kirin right now? First, the company's diversification into health science is underappreciated. It could unlock long-term value that hasn't been priced in yet. Second, the balance sheet is solid, allowing for continued strategic investments. And third, the current valuation might reflect overly pessimistic sentiment about Japan's domestic beer market, which is already factored in. On the flip side, there are real risks. Growth is slow, especially in traditional beverage segments. Global expansion has been cautious, and competition is stiff in both beverages and wellness. Currency fluctuations can also impact earnings, since Kirin is expanding its global footprint. So if you're looking for rapid growth, this may not be the place. But if you're after a stable, diversified consumer company with an income component and long-term transformation potential, Kirin could deserve a closer look. At Insightful Value, we provide in-depth analysis of undervalued companies like this. We strip away the noise, focus on the fundamentals, and help you spot overlooked stories in plain language. If that sounds like your kind of investing, be sure to subscribe to our channel and head over to insightfulvalue.com for more ideas and data-driven analysis.